Hello, everyone. All right, let me just jump right into it here. Little technical analysis lesson on GameStop. And I don't know. I guess I have issues with it. This Warren Kitty or some of these other people are considered these like populist heroes. You know, let's battle against the hedge funds and the market makers. Let me tell you something as someone who actually ran the trading for a bunch of different hedge funds. Guess what? Who do hedge funds manage money for? Most of the time, pension plans. Who's in a pension plan? The little guy. Hedge funds manage money for the little guy. I know that might sound crazy, but anyway, it's just one of these stupid Wall Street narratives that retail traders have because if they lose money, they want to blame someone else. Those are the bad traders. The good traders say, man, I lost money. What did I do wrong? I don't want to do that again. Or I made money. What did I do right? Let me see if I can do that again. So here's GameStop, and obviously we had the what we would call a capitulation to the upside. Look at the volume, all right, over these last couple of days. Well, whatever, early last week. When everyone who wants to buy GameStop buys it, there's no one else who wants to buy it. Therefore, the price cannot go up. You need buyers to push a price up. If the buyers are all full, they're all done, they all have the positions they want, guess what? The only way it can go is down. So your classic buy on the rumor, sell on the news thing, or the crowded trade. But despite all the hoopla and everything, let's look at some of our basic rules. Where did GameStop find resistance? Was this a coincidence? I don't think so. It was resistance over here, same levels, right around 63. There are people that bought shares back here that have been waiting ever since to get out of break even. So now that it finally gets back up to their level, these remorseful buyers are selling it. And if there's enough sell orders, like apparently there was here, that's going to put a top on it. Finding resistance at a former peak is a very common thing in the market. You can even see it here with GameStop. Here's March of 22 around, I don't know, I guess around 47, 48. Same thing right there. So the stock collapses, not surprisingly. Where does it find support on the way down? Where does it take a breather on this day? The same level that was a peak back here. Former peaks can also become support because it's seller's remorse, not buyer's remorse. People sold and it went lower, and there have been people that have been waiting ever since that are like, man, I shouldn't have sold. If this gets back to my level, I'm going to buy it back. If I can get back, if I can get it in at the same price I sold it at. So resistance can become support. And we can see that right here. Well, here support becomes resistance. This is another manifestation of buyer's remorse. People buy here, the price eventually goes lower. A lot of them say I made a mistake. If I can get out at break even, I'm going to. Resistance, resistance. So support can become resistance. And here we see another example of resistance becoming support. So this is about, we're just going to call it $19. Today's low trade, 1894. I wouldn't touch this thing with a 10-foot pole. I mean, you never know. Some other influencer could come out and be like, oh, blah, 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 and the thing's up 100% tomorrow. But I mean, if that happens, I would try to get on the other side of it again. This has been some pretty easy money to make over here on the short side for people that are savvy that understand this. Over here at Stock Market Jobber, I'd really, people overdo this stuff with technical analysis. So there's all these esoteric and weird methods, Gann theory, Fibonacci, Elliott wave. Let me tell you something. As someone who was in the institutional trading world for more than 20 years, nobody in the institutional world looks at Gann charts. Nobody in the institutional world looks at Elliott wave. Nobody in the institutional world does Fibonacci. Okay. I mean, I'm just telling you what it is. All right. If you can make money with it, that's great. Maybe I should take it, explain it to me. I'd love to hear it. But I don't know. What does a Elliott wave tell you about supply and demand? Remember, if you look at a chart the right way, it's a graphical illustration of investors' psychology and supply and demand. All right, so let's go look at SPY. A very quiet day, but that could be good because we've had such a move higher that we need to consolidate. This is like healthy action. If it just rips higher and higher and higher, it's going to eventually fall back fast. When we get a move and we get some nice kind of slow action here, this is this is good. we kind of go up like a staircase. One of the things I like to do, which I did learn from my time in the institutional world, is to always kind of have an idea of what these sectors are doing. So if you look at the SPY fact sheet, all ETFs have a fact sheet, and you go to holdings, you can see this is SPY and SSGA, State Street Global Advisors. That's who runs this. And here are the sectors. Different sectors are in charge at different times. Tech is the biggest, about 30%, but you got financials, healthcare, consumer discretionary, communication services. When you get to these small guys, they don't really influence the broader market, but we always look at them for trading ideas. Energy is pretty small too, but energy has the ability to influence the rest of the market. And consumer staples is small, but sometimes money flows into consumer staples right before the market goes lower. It's like your classic flight to safety. So different sectors are important at different times. I think the most important thing to watch right now is probably this financial sector. Oh, look at that. Woo. Man. All right. Here's an example of, oh boy, this could be a false breakout here. False breakouts in and of themselves are good trading signals, contrarian trading signals. Looked like it was going to break out. That consolidation process, that resistance converting into support, it didn't happen. Big move lower. These things tend to continue. All right. Now, if you're not an options trader, one of the things I like to get exposure with is this FAZ ETF, FAZ. Maybe I just like saying it, FAZ. Look at it today, up 3.7%. This is designed to move 3 times in the opposite direction of the way the financial sector moves. So if you're not someone who buys options and you think the financial sector is going to go lower, this is a good place to be. If you are someone who buys options, you could really get a pretty serious move here because you're using options which are leveraged to buy a leveraged ETF. So if you're on the right side of that, that's pretty there's gonna be some nice trade in there, man. All right, everyone. So I think those are kind of the 2 most important things to watch. Had a big move higher in tech today. See how we kind of consolidated before the next move. So I don't know. Now it's going to be like a battle over the next few days between tech and financials. Who is in charge? Is it the tech sector or the financial sector? So this is what we're going to be focusing on. So make sure you check back tomorrow. Please join our community. Please give me all the likes and all the smashes and whatever the heck all that stuff is. And hope this helps. And I will see you soon. Thanks, everyone.